All right, Henry, we're about a minute out. I'll just lead us off with a quick intro. We'll be all set to go.
Sure.
All right, everyone, welcome back to Money, Metals, and Mining Virtual Expo. We are pleased to welcome Henry Weingarten since May 2nd, 1988. He has been the managing director of the Astrologers Fund. In addition to utilizing fundamental and technical analysis, he employs astrology as a primary tool to oversee investment funds. One area of expertise is the precious metals as cosmic value investor. He has many accurate calls beginning from the early 80s into the 90s, as well as currently. To make more money with less risk, he advises pair trading and timing trading markets in addition to long-term buy and hold for quality precious metal stocks. Henry, it's a pleasure. Thanks for joining us. It's all
Right.
yours.
Thank you for having me. Of course, everything I say, you have to do your own due diligence on. When you listen to any market person, it's a good idea to know where they're coming from. I'm basically a cosmic value investor. That means to say I like to buy something that's undervalued. When it gets overvalued, reduce or sell it. And of course, I like to time things. And many people believe timing is everything, and it's certainly something that can be very, very helpful. So let me talk about my basic approach first, then we'll get to the precious metals. Our basic approach is that everything you see in the markets today, you'll see tomorrow, next week, next month, is geared for November 2026. Our goal is always to make more money with less risk, and that's basically how we like to work. And we believe you should be prepared for great physical and economic challenges upcoming in the next 6 to 9 months. Doesn't mean it's going to happen. We believe it will, but if it doesn't, you need to be prepared. That means have the ability to buy if and when markets panic. It means don't be margined up to kazoo. Make sure you have some liquidity and the capability of buying if the markets drop 5, 10, 20%. We believe that good stock picking, especially if combined with trading, greatly outperforms index funds, although index funds have done extremely well over the last few years. A little bit less this year, but not bad. But certainly the previous 2 years, they did well, but not as well as somebody who timed it and traded it. Again, invest for 2026. Our view is that the idea of a soft landing for the US global economy is somewhat fantasy. You may agree, you may not, you may disagree, but that's our view. Recently, the OECD just said we're going to have about 3% global growth. They've increased it by a point. In my view, it's simply undervaluing inflation. I don't believe inflation's under 3%. And any of you that go to the supermarket and live in the real world know that's not the case. So let me give you a little astrological, because that's something probably you're not used to. There's a very interesting aspect that took place this summer almost, and is definitely taking place in the winter. It's called the Saturn-Neptune conjunction. I'll go into that in a moment. But the image is a rock on a cloud. Think about that. What's a rock on a cloud? Two clear examples. One is the fall of the Berlin Wall, but the one that relates more in mining is the spectacular collapse of the Bre-X. In fact, we got our clients out at the time 2 weeks before the Bre-X disaster, basically because of this particular aspect. Now, in the summer, it was nearly exact, which means we were almost having it. In the winter, it is exact. Now, what does that mean? Neptune is uncertainty, and one of the things the markets are full of is uncertainty. And Saturn is fear. Now, right now, markets are not fearful. But if you think about how they were a few months ago, they were fearful. They were getting there, but they didn't quite arrive. We believe with a strong likelihood they will be arriving by the winter, spring of next year. So our view is to portfolio manage whether or not markets are range bound, whether or not there's a late cycle melt up, or whether they crash. And what do? We personally like to buy dips. We like to sell rallies. This is not the only way to make money, but it's what we like to do. We like to do long, short pair trading. And when the markets are a little frothy like now, we like to write calls. And again, we're thinking about November 2026, just as the people behind the curtain are. So we think there's still likelihood of a correction. That's a 10% move. We're constantly shorting markets to some extent. We'll give some examples of that. But if not, in the winter, we think it's highly likely. That's the broad market, not the precious metal market. So let us assume that markets, as we get to winter, will go down. Then three ideas for a K economy. And a K economy means a few people are making lots of money and a lot of people are struggling. Gold and silver and entertainment. And if you think about the depression, and by the way, I'm not predicting a depression, but we are saying that there'll be a slowdown. We are saying there'll be recession-like or a recession next year. So entertainment, gold and silver, and then having some cash, which now a lot of people don't like, for income, distress, deep value, and special situations. That is to say, the ability to buy as it was in October 22. So let's talk about gold specifically. We think there are 6 points, probably many in the audience are already aware of. The first is gold is cheap geopolitical crisis insurance. And one of the reasons gold is so elevated is because of perceived crises globally. The second one is extremely important for investors who cannot or will not buy the US dollar, or those that want to safely and cheaply hedge their US exposure. Only gold is as good as gold. Very important, because we often look at it in dollar terms, but it's very different when we look at it in yen terms, when we look at it in euro terms, when we look at it in rupee terms. So if you can't buy the US dollar, want to hedge it. Number three, it's a very attractive alternative risk mitigation coin. And now three things that have changed in the last few years. First, and I think we're beginning to see crypto lovers think about gold, especially with stable coins coming. At that point, gold will be in the $4,000 to $5,000 range. There's record gold demand from central banks the last 2 years, as much and perhaps even a little bit more than the bonds, the say US bonds. It's a little bit less now. I'm not sure it's going to be as strong. And then if you have an international gold-backed currency, which the BRICS have been talking about, if it is, will be 4,000 plus. And these are relatively conservative numbers. So what is our general advice? Let me just move that up a bit. We prefer to buy wholesale, not retail. And I'll go into some great detail. That's the one point that I think it's very important. We're going to go into that in some detail. Secondly, while you can trade anything that moves long or short, invest only in quality, because when markets change, those that aren't quality drop rather precipitously. When gold and silver stocks are full or overvalued, which a few of them are, based on certain assumptions, which I'll discuss, we write calls. If you want to reduce risk, we trade long short. And money management's number one. Currently, however, gold and silver companies have the wind behind their sails. There's increasing investor demand and profits. Finance is available and lots of M&A. This gives us a flavor of where we want to be. So here's an example. One of our favorite long-term plays is a South African stock, the only one we play, as a matter of fact, DRD Gold. Take a look at this. Would you have liked for 10 years to have made 200%, or would you have liked to make 1,200%? Think about that. Would you rather make 200% or 1,200%? Let's do another example. Our favorite current silver company, Vizsla. Here's a 2-year chart. Would you have wanted to make 71% or 250%? Tough questions, right? Next. Here's Vizsla again, Vizsla versus gold. But note, excuse me, I'm moving my thing over here. Note, and this changes, the big movement up, because when gold becomes hot, the gold stocks, the silver stocks, move much greater, and we go down the cycle. Now, I know some of you are thinking, well, gold, the companies will disappear when gold, But if gold goes to 5,000 or 4,000 or 8,000, you will make more money owning quality gold and silver stocks, not junk, but quality. And if we get to 8 to 10,000 in the next year, you don't want gold, you want guns, ammunition, and food. But I don't think that's anywhere in the cards. So let's give a few examples of stocks that we like, and then we'll continue. Obviously, dividend paying, large cap gold miners attracts big money. Royalty plays are very popular now. Most of where gold has gone up 40, 50%, depending on what you're playing in, you get double that in the last year. But let's take the top stocks. If you had to have one quality stock, it's Agnico Eagle, AEM, basically a I've always felt it's too expensive, but it's always made money. It's always run right. And when you see them investing in a junior, take a look at that company. You know it's been well vetted. And DRD Gold, because of its SRI leanings and because of its specifics of what's happening in the next couple of years. Those are two very safe plays that 2 years from now will be up. Royalty and streaming is an area where downside is limited and you get a lot of the upside. EMX royalty has been our favorite, well over 100% this year. It's currently in a new merger, uh, and we haven't done the full economy of it, but I'm sure it's going to do well. Another one, which is rather interesting for us, is Vizsla Royalties. Remember, Vizsla Silver is our favorite company. Why? Because their IRR is over 100%, which means you get your money back when you produce in less than a year. And if silver dropped 50%, which I'm not suggesting is going to happen, their IRR is 70%. Unbelievable numbers. So what they did was to make money, they did a single asset. Normally, companies like EMX royalty, et cetera, have hundreds of royalties, and that gives you safety. They took a single asset and they were able to monetize it. Great Bear did this as well. Wheaton Precious Metals is a very common one. We're doing a valuation review because if gold doesn't go much up, it's pretty well valued. But of course, if you believe gold is going to 4 to 5,000, then it's a winner. And now one that we ran into, but we're not going to invest till next year, was Sandstone, which became kind of Royal Goldie. Now, what's the interesting thing about Royal Gold, which in the new merger is about 15, 60 billion, is if it gets to 22 billion, it goes in the S&P 500. Think about that buying. So once we get to about 18 billion, if we do, and if gold goes to 4 to 5,000, which it may or may not, then take a look at this, because when it's about 10 to 20% short of that 20 or 23 billion, whatever the number is, then you're going to have all that buying because they're a US company and they can go into the S&P 500. Now, there are plenty of others we look at as well: Gold Royalty, Nations Royalty, VOPS, etc. So let me just move this off my screen a bit. Okay, there we go. Now, for those who like to make money, and this is an old saying, if you don't take a risk, you don't drink champagne. It's actually a Russian race driver's saying. So there are 5 companies we every quarter to 6 months we come up and put in a basket, because if you're playing a high risk game, 1 or 2 of them is going to make it and the others aren't, at least in that time frame. If you want just one, it's the one we're playing at the moment, is Gold Terra. It's a company we've been in for about 2 years, but it's currently on the move. Excellent management, excellent properties. It's been sitting there. I think it's about to make its move. So that's one. And there are some others: Flagship, PT Gold, Rockhaven. So we put different baskets in. There are some 1,500 stocks. About 300 or 400 will move if gold continues to move. If gold doesn't continue to move, though, if it gets steady, then you're going to see less movement there. So these are just for those who like to play high risk, high reward games. Now, this is a very important question. How much of your portfolio should be in gold? Traditionally, it was 5 to 10%. That was the old Swiss formula. If you had higher numbers, it's because you felt the economy had moderate to high risk, which I believe is the case. And if you think that everything was going to hell into a basket, you would go higher. But I always used to wonder, how could 5% cover what was going on? So I went to my go-to person, CPM Group, which, if you don't know them, they're one of the best people for facts. I emphasize facts about gold and silver. And Jeff Christian was kind enough to optimize it. That if you wanted to take this graph from not from 1968 to 1980, but from 1968 to December 24, you needed 25 to 30% of your assets in gold, which for me is a bit much, but if you wanted that full protection. Then take a look at this. Morgan Stanley now is rethinking the old 60-40 portfolio, 60 in stocks, 40 in bonds. One of their people, and this is not, which is their CIO, recommended a 60-20-20. 60 stocks, 20 US bonds, 20 in gold. When I saw that initially, I said, oh my God, gold's going to 5,000 tomorrow, because Morgan Stanley manages an incredible amount of wealth in family offices. But then I realized they're looking at various options outside the US bond market, because that's the big question in the next year. What is the risk in the US bond market next year? I don't think it's great as most people think. But if it is, then you want to have more gold. So what's the procedures that we want to do? Being value traders, I don't like to overtrade. I'm not a momentum person, although I trade momentum, obviously, but I don't invest momentum. So we believe if you don't own any, immediately I'd buy some to accumulate some gold quality precious metal stocks. But what's the average right now? The average is about 1,500 for gold. That's their all-in sustaining cost. And silver about 20, although there are stocks that we like that are much under 20. There's gold stocks we like under 15. But we like to buy, generally speaking, on pullback. The problem is, if we take a story like Great Bear, when I first heard the story, I said, this is great, but it's too expensive. Came back about 9 months later, stock had gone way up. And I said, this is a great story. I want to buy it on pullback. Came back third time, had gone way out of my league. They had been very successful. So you need some exposure if you don't have some. We've been overweight in gold and silver. In fact, we're starting to reduce non-core holdings now. That doesn't mean we're not going much higher, but we believe in taking profits when they're there. And when they're over 100%, we like to reduce. However, when we get to November to February, we'll probably just be buying, again, depending on what happens in the next month and a half. This will be a little shocking to many of you. We believe gold is way overvalued. Now, that doesn't mean that it's going to drop, because for many years, gold was way undervalued. And it was very easy. The stocks were undervalued. The gold was undervalued. Silver was undervalued, silver stocks. We believe as a commodity, it's only worth about 2,100. As a currency, about 2,700. As an inflation metal, 22. But as a crisis metal, it could be up to 4,000. So right now we're trading as a crisis. We believe actually crises are going to be reduced, although it doesn't look like that in the world's market. But we think there's a good likelihood it may be reduced. If it is, then we can have a test of 3,000. Right now, 3,600 is obviously very strong support. So generally speaking, we are long precious metals as investment, but we also use them as a portfolio hedge. If it's a portfolio hedge, you're using them differently. And again, quality gold and silver stocks will continue to outperform physical gold and silver. Just the way it is. Silver, again, we only worth is 28 to 32. We're still long a lot of silver. There's a lot of good silver stocks we'll talk about in a moment. But while lower US interest rates are positive for gold, without a major geopolitical crises, I think we're getting near the top. However, we believe that we're going into a global slowdown. One of the two drivers of silver is the economics. One of the reasons we have these numbers. Now, this is the gold-silver ratio. Obviously, it's been extreme. It's been over 100. It's not a totally reliable indicator, but when it's extremes, like it was, it is reliable. So it's sort of positive. So again, we believe it's more profitable to buy wholesale than retail. A stock like Visa, which we've been in, it's almost up 100%. Plus, we think it will be at least another 30% over to 50% over the next 2 years. If you have a belief that gold is and silver is going to go past 50, then this is going to definitely go well over another 100%. We took a look at a number of silver companies that we tracked. Almost every one of them shall be up next year if silver stays where it is. We haven't decided on a second and third one. I don't know if you like to diversify with lots of ones. There are a lot of good silver companies out there that we look at. Visa is the best by far, but you certainly want to own more than one. And here's a selection that you can take a look at. Now, buying and selling. Most people have no trouble buying, but a lot of people have trouble selling. And it depends why you own it. And also, if you buy and sell, we don't suggest doing it all at once. Step in and step out. If you take profits along the way or cut your losses along the way, you will have a much better portfolio than if you don't. Otherwise, you're gambling. However, many people buying gold, silver as a hedge. If you're using it a hedge, then it goes down and something else you own goes up. Then you don't need to sell. If you're buying gold and silver as a long-term investment like real estate, 10, 20 years, then you don't need to sell. We did most of our buying around 18. We actually suggested selling at around 36. We're higher. But in the last cycle, when we got out at silver at 30, we shorted it at 49. It's different. But we're suggesting now to potentially, even though we think the market's up, we think momentum is strong, is to starting to reduce a little if you're fully exposed. If you're not, then you want to go the other way. Now, again, you can buy and sell, but as long as gold's over 3,600, which it is, silver's over 40, which it is, we like to sell it periodically. We're trading it. We did today, for example, sold 38.20. And when we do that, when it's counter trend, we take half profits overnight, stop the rest in the morning or overnight because we're playing futures, and we either get stopped out or it continues down and we make more money with a trading profit. This is counter trend at the moment, so be very careful. You don't short and hold, but you trade and hedge it. And 45 may be it for silver, maybe it won't be. We tend to think it's overvalued short term, and then we'd like to be buyers again in a few months. We may or may not get the opportunity. So our view again is we want to make more money with less risk. We believe to be prepared for great physical and economic challenges. Gold and silver is one way to prepare. Make sure you have the ability to buy if and when markets panic or even correct. Think about November 26. Things are going to be different then. So we recommend being cat-like, accumulate, buy your favorite stocks and commodities, but when they're elevated, consider selling a little bit, considering writing calls. Don't jump in. And we think by using some astrological timing, you could not only are we there first, but we think we do very well. We also have quite a lot on YouTube. You can see many more companies periodically. Do take a look at it. Okay, I think we're ready for some questions.
All right, Henry, thank you so much for that fantastic presentation. We had a viewer write in. They were wondering, what's your forecast for copper, platinum, and palladium?
Okay, copper, we are not as bullish as most people. We've been trading it quite well. When it was much lower, around 380s, we were buyers. When it was 540, I think it was, we were sellers. We believe we're going into a global slowdown. Now, fundamentally, if we're talking on a long-term basis, copper's great. Obviously, for all the reasons, from AI, electricity, blah, blah, blah. But if short term we're correct that we're going into a slowdown and correction, then copper will come down again. So at the moment, we're holding off. We believe sometime next year we want to be buying. We like to buy and sell extremes when we can. We did that copper 380, and when it was over 5, Think about the following. Everyone thinks gold and silver is on rally. Remember natural gas. Went up to $10. Here it is at 3. We got out at 8 and then started selling. So just because it's up doesn't mean it's not going to come down. I've been in this game for 30 some odd years. So at the moment, it's wins on your sales. So copper, we like copper companies. We like some copper and gold because if you take copper and gold together, you're sort of dealing with both economic cycles, the bad ones and the good ones. So we're not buying quite now, but as we do our December reports, we'll be buying some copper and gold companies. Platinum and palladium, I don't know because I don't track South Africa and I don't trust Russia that much. And unless you have some inside knowledge there, you're going to be sideswiped. Were there any other? You asked me about copper, platinum, gold. Was there anything else in that question? I'm sorry.
Uh, Palladium was the only other one it looks
No,
like.
plain. I don't again. I don't unless you have inside knowledge in South Africa and in Russia, you can be sideswiped.
All right, excellent. Thank you so much. We another viewer writes in, they said, if today is the start of a short-term correction in the S&P 500 and Nasdaq, what do you believe will be the magnitude of this correction? And will it be about the same as April 2025?
Well, we were short for April and then got stopped out because I would like to see it go down to 6,000. We went short again today, but again, that short may not hold it. God, I have to take a look at my charts, but I think you'll see 10% for sure. But we may not. You know, markets are highly manipulated. You're fighting the Fed. You're fighting Donald Trump, who measures himself by the stock market. And, you know, all presidents and all governments tend to manipulate a little bit. But I would say 10% we'd start to look to rebuy. Whether gold and silver will join it is the issue I don't know. We're both buying and selling at the same time. As investors, we want to be long. As traders, we're shorting, but we get stopped out quite a lot. We've been doing a lot of shorts. Same thing we did in Bitcoin. We did about 8 shorts on Bitcoin. 7 were highly profitable, and then we sort of gave up when it got over 100. So I think 10% is reasonable. 5 is almost a certainty, but it may not be today. It should be. It's frothy. The market's expensive. They're building in fundamentals that are not the case, but fundamentals don't matter until they do. So it's a good place to position. It's a good place to take profits. If we don't, you know, we have all of September and October for a market correction. And then we'd like to be very long back into the precious metals.
All right, thank you very much. Another viewer that came in late, he said, perhaps I missed this, but what was the foreseeing happening in that November date that you had mentioned?
Well, there's some positive astrology from November. Like in January, there's again a very positive time. There's some, but it's a lot of this is already built in. We believe most of the positive astrology has already happened in the last year or two. And see what the charts have been. We were like super bullish. We're moderately bullish here. November, we have some positive things. January, maybe so much so that we might short NASDAQ and be long gold, but we have to see what the numbers are to see if that's the case. It's one of the positive things. So the next 3 months, I'll be doing a lot less shorting of gold, even as trading. But at the moment, it's frothy. Technically, we've got to get about 45. We may not get there. We may get to 50. Gold, 38 is tricky here. We may not get to 4,000. We may. Again, we're dealing with people that are not the traditional players. When I was involved in gold and silver last century, it was only the people in the industry trading it. Then the hedge funds came in. They didn't care about fundamentals. And we now have a lot of people who are newbies and they know less about the fundamentals. So I will be looking at things differently in November. That's all I can say.
All right, thank you very much. Another viewer here, they're wondering if Gold Terra, the ticker YGTFF, they're asking, is it more risky because it's a penny stock?
Oh, absolutely. And it's actually YGT if you're playing it on that. It's a very, when I got those things, those are high risk plays. Now we held it for 2 years and was trading around 3.5 to 5, came in again here at 550. It's now at resistance at 8. But if the person who did it, Gerard, set up $1 billion company before, has a company that checks all the boxes. If you had but again, this is money. This is speculative money in that batch. That's money you can afford to lose without changing your lifestyle. You don't put your whole house into it. You can put a gamble if you like to gamble. If you want to be conservative and you're using gold to protect yourself, then this is not the play for you, even though this is a really good play and really good management and really good properties. But until gold goes down or gold goes up higher, remember, the higher gold is, the more risk people will take. So right now it's mid cap and hard cap, but mine, but we're doing well with some of the micro caps. But micro caps have a lot of risk. If you're not familiar with that, read about them. That's why I like to do it in a basket of 5 or 10. One or two or three will go. Remember, only one company in 100 becomes a mine. So out of the 1,500 companies or 2,000, you're going to get 20 mines. But that doesn't mean you can't make money along the way. It's a lot like biotech.
All right, thank you. And time for one more here, Henry. Um,
Sure.
Viewers wondering what major cycles do you use for gold and silver, for example, Pluto and Jupiter?
I don't. There are two ways to do astrology. One is to do planetary cycles, which you mentioned, which are very valuable. But I was trained as an astrologer, so I do individual charts. So I do charts of gold companies. I do charts of gold commodities, like the CMA. So I'll use different things that are individually based as well. And so I prefer that. Now, the cycles are always important. Um, each of the planets have some value. But to me, the Saturn Neptune is what you should be considering because that's a rock on a cloud. It's there, it's coming in. It's possible it won't be a problem. But if you look at the Jupiter Saturn that we just had recently, two of the three times the square went down, we played that. Third time it went up, which can happen. But we do individual work because that's how we were trained as astrologers first. Most people were trained as technicians first and astrology second. We were trained the other way. And there's a financial 101 on my website, two of them that would go into much more detail on the YouTube Henry Weingarten.
All right, Henry, thank you so much. We are speaking here, Henry Weingarten, Managing Director of the Astrologers Fund, Inc. Henry, thank you so much. Greatly
My
appreciate you.
pleasure. Thank you.
And a big thank you to all of those in attendance. You're watching Money, Metals, and Mining Virtual Expo. We have more great content coming your way tomorrow, so be sure to log in and check that out. Thank you again for logging on today. Everyone, have a great evening. We will talk to you soon.
Should I be cutting off now or we cut off?